Assalamualaikum warahmatullahi wabarakatuh. Hello everyone, we are from Group 5 and today we will present about the basic concept of corporate income tax. This is our group members consist of Baimanah Lailatus Sajat Budian, Melisa Putri Afifah, and also me, Salsa Mahadila Laura. And here the material that we will explain. The first one is about basic concept of corporate income tax. The second one, cost concept of gross income reduction. And then the third one, depreciation in tax. Okay, we jump to the first material. It's about the basic concept of corporate income tax. For the first, we talk about corporate income tax. Taxable business profits are calculated on the basis of normal accounting principle as modified by certain tax adjustment. Generally, a deduction is allowed for all expenditure incurred to obtain, collect, and maintain taxable business profits. A timing difference may arise if an expenditure recorded as an expense for accounting cannot be immediately claimed as a deduction for tax. Resident taxpayer and Indonesian PES of foreign companies have to settle their tax liabilities either by direct payments, third-party withholdings, or a combination of both. Foreign companies without a PA in Indonesia have to settle their tax liabilities for their Indonesian source income through withholding of the tax by the Indonesian party paying the income. Next, corporate income tax or CIT rates. The first one, for fiscal year 2020 until 2021, a flat CIT rate of 22% applies to net taxable income. And then the second one, for fiscal year 20 and 22 onwards, a flat CIT rate of 20% applies to net taxable income. Next, we need to know the difference about individual income tax and corporate income tax. The first one, in general definition. So in general, individual taxpayer and corporate taxpayer are distinguished based on the tax subject and tax object. Individual taxpayer are divided into two, namely domestic taxpayer and foreign taxpayer. Individual taxpayer report their income through the annual SPT. And then the tax subject of corporate income tax is a business entity that is given the obligation to pay taxes in a month or year period and deposit it into the state treasury. The object of corporate income tax is income received or earned by the entity. Income as an object of income tax in Article 4, Paragraph 1 of the Income Tax Law. Next is individual income tax versus corporate income tax based on tax subject. Personal income tax applies to the following entities. The first one, self-employed individuals, and then the second one, full-time employees. And then for corporate tax, apply to the following institution. The first one, all corporations originate in the country, small, medium, and large. And the second one, corporation running a business inside the country. And then the third one, foreign enterprise with a permanent establishment in the country. And then the last one, corporation that are residents for tax purpose inside the country. Next is based on tax rate. The first one, individual income tax rate. That is, non-resident individuals are subject to a general withholding tax or WHT at 20% in respect of their Indonesian source income. Concessions are, however, available where a DTA is enforced. Next is tax rates for corporate income tax. So for fiscal year 2020 until 2021, a flat CIT rate of 22% applies to net taxable income, while for fiscal year 2022 onwards, a flat CIT rate of 20% applies to net taxable income. Here case example of corporate income tax. In 20 and 21, PT ABC earned a gross income of 5 billion. Before we know the taxes that must be paid by PT ABC, we must know first the taxable income of it. So the taxes to be paid are 50% times 22% times 5 billion, and we got 550 million. However, it should be noted that during the period of 20 and 21, PT ABC has deposited employee income tax to the state treasury of 50 million and Article 23 income tax of 100 million. Therefore, the income tax payable by PT ABC is 550 millions minus 50 millions minus 100 millions, and we got 400 millions. 400 million is a figure that can be repaid by PT ABC to the state treasury for the income of the business entity in 20 and 21. Okay, I think that's all from me. For the next material will be explained by Melissa.
Good afternoon, sir. Good afternoon, friends. In this session, I'm Melissa, and I will give some explanations about cost concept of gross income reduction. The amount of taxable income for domestic taxpayers and permanent establishments is determined based on gross income less cost to earn, collect, and maintain income. This include first, costs that are directly and indirectly related to business activity, consists of the cost of purchasing materials, costs related to work of services, wages, salaries, honoraria, bonuses, gratuity and allowances, interest, rent and royalties, travel expense, waste treatment costs, insurance premium, promotion and sales costs regulated by regulation of Minister of Finance, and the last one, administrative costs. Second, depreciation of expenses to acquire tangible asset, amortization of expenses to acquire intangible assets, and other costs that have useful life more than 1 year. Third, contribution to pension funds that have been approved by the Minister of Finance. And fourth, losses due to the sale or transfer of property owned and used in the company or held to earn, collect, and maintain income. Fifth, losses on foreign exchange differences. And sixth, cost of research and development companies conducted in Indonesia. Seventh, scholarships, internship, and training costs. 8. Receivable that are clearly uncollectible in condition that they have been charged as expenses in the commercial income statement. And 9th, national disaster relief contribution. The provisions are regulated by government regulation. The last one, donations in the context of research and development carried out in Indonesia. The provisions are regulated by government regulations. Okay, that is all from me. Thank you for listening. Bye-bye.
Okay, so now we are going to talk about depreciation in tax. Depreciation in tax. In general, expenses incurred in the ordinary course of business to obtain, collect, and maintain taxable income are deductible, subject to the requirements for documentary support. Note that expenses related to gross income, subject to final income tax, are not deductible for CIT purposes. Depreciation on the expenditure of tangible assets can be carried out in decreasing parts over the useful life, which is calculated by applying a depreciation rate on the remaining book value. And at the end of the useful life, the book value is depreciated all at once, provided that it is carried out in accordance with the principles. Depreciation begins in the month the expenditure is made, except for assets that are still in the process of being worked on. The depreciation starts in the month the property is completed. Taxpayer is allowed to make depreciation starting in the month the assets are used to obtain, collect, and maintain income, or in the month the assets concerned being produced. To calculate depreciation, the useful life and depreciation rate of tangible assets is going to be explained in this table. And here is the table of tarif dan masa penyusunan fiskal. Further provisions regarding the depreciation of tangible assets owned and used in certain business fields shall be regulated by a regulation of the Minister of Finance. So that is all from me. I will give it back to moderator.
Okay, thank you to Melissa and Baimana. I think that's all from our group. We apologize for all of our mistakes. And wassalamualaikum warahmatullahi wabarakatuh. Thank you.